Good afternoon, this is Richard Flax at Moneyfarm and welcome to our year-end video. We wanted to look back at some of the key events in financial markets in 2023 and share a few thoughts on the outlook for the coming year and beyond. This time last year, the talk was all about how 2023 would be the year of bonds. But in the end, it's been mainly equities that have shone. After a nasty repricing in 2022, many investors believed that inflation would slow more decisively and the time was right for longer-dated bonds to outperform. At the same time, concerns over the outlook for global growth left many investors cautious on equities, even after a weak performance last year. What we've ended up with is the opposite. Inflation did come down, but not as quickly as some had hoped. At the same time, central bankers were wary of declaring victory too soon. Policy rates continued to drift higher, and investors shifted their view on when those rates would begin to fall. That pushed the yields on longer-dated bonds higher. At the same time, in equity, some of the big losers in 2022 had a sharp reversal of fortune. Overall, equities rose, but a small group of US tech stocks dominated returns and drove the market higher. Optimism about artificial intelligence explains some of that move, but we also saw some very strong operating results. After years of expansion, a number of large tech companies were able to cut their costs without impacting their revenue growth, producing very strong profits. On the macro side, this time last year, the discussion was about the risk of recessions in Europe and the US, and the prospect for a strong recovery in China. Here again, things didn't quite work out as the consensus expected. European growth was stagnant, perhaps better than we might have feared, and the US economy proved much more resilient than expected. When you think back to the regional banking crisis in the US in the first quarter of this year, it's in some ways remarkable how well the US economy has weathered higher rates. At the same time, China's recovery was a bit more of a disappointment, as weakness in the property sector hit sentiment. So as we approach the end of 2023, equities have performed better than many expected, and bonds have probably done a little bit worse. And the recovery in large US tech stocks has driven a lot of those moves. So if this year didn't go quite as many people expected, what can we say about 2024? We actually think 2024 might look a bit more like the consensus view for 2023. We think longer-dated bonds do look better value as inflation continues to drift lower. Equity valuations, particularly outside the US, keep looking relatively attractive versus history. But in the short term, we do think that growth is likely to weaken in Europe and the US, as consumers really feel the impact of higher rates. That will strengthen the case for lower rates as we go through 2024. And this, everything else equal, should be positive for both equities and bonds. However, as we look into 2024 now, we think some equity investors may be a bit too optimistic about the outlook for corporate earnings next year. From a portfolio perspective, that means having more long-dated bonds while keeping some powder dry in case we see some interesting opportunities in equities. As always, it's worth asking how this basic outline could be wrong. There are a couple of scenarios worth exploring. The first is around inflation and central banks. Investors are now quite optimistic that policy rates will come down from the middle of the year. But inflation has been tricky to predict, and it might yet prove stickier than we hope. Another scenario worth considering is that central banks do begin to cut rates, particularly in Europe, where inflation is getting closer to target. That could prompt renewed optimism around future growth and help equities beat bonds again, particularly outside the US. As we see some of the macro imbalances from the past few years starting to normalize, we think the outlook for financial markets has generally improved. As usual, we've been working on our strategic asset allocation, where we think about the long-term returns for a range of asset classes, and the preliminary outlook looks quite positive. We'll talk more about that early next year. With that, we'd like to wish everyone a very happy holiday season and all the best for 2024.